IRCTC had been the blue-eyed boy of the stock markets ever since its stellar listing. However, it had a dramatic reversal of fortune thanks to the COVID-19 outbreak that has brought its operations to a standstill. In our Ideas for Profit today, we will discuss how should investors tread in this stock post the earnings. Well, the Q1 FY21 performance of the company was expectedly dismal. Now, revenues came in at 131 crore rupees versus 459 crore rupees in the same quarter last year. Now, also the reported loss of about 24 crores in Q1 is something that we need to take note of. Normal railway operations came to a standstill in Q1 with only select trains operating to ferry the migrant laborers. So the ticket sales as well as all ancillary services like catering and sale of water, they all took a hit. Now, the near-term outlook definitely remains uncertain even now. Having said that, with gradual restoration of normalcy, the company's ability to absorb the fixed expenses should definitely improve from here. Now, while FY21 on the whole is expected to be a complete year of a washout, the quantum of the net loss is likely to come down in the forthcoming quarters after the Q1, the kind of performance that we've seen. Now, we expect a return to the pre-COVID level in the second half of FY22. In addition to the lackluster numbers, there are strong indications that given the significant revenue shortfall in FY21, the government might also like to monetize a part of its stake in the promising company. Now, as for now, the government's holding in IRCTC is to the tune of 87.4%, and further reduction in stake is highly probable. Thus, investors looking for quick gains should definitely not look at IRCTC at this stage. However, the long-term appeal of the stock does not get tarnished because of the COVID disruption or the follow-on offer. Now, IRCTC definitely enjoys a rare monopoly in multiple businesses, catering services to railways, online railway ticketing, packaged drinking water at railway stations and trains in India. Now, in addition, the company also offers a variety of travel and tourism services and has an excellent balance sheet with zero debt at the end of FY20. Now, IRCTC is eyeing new businesses post the private sector participation in running the railways as well. IRCTC is one kind of a business that we have seen which has no comparable peer, no promoter issue, which is owned by the government so far, and little risk to the long-term earnings unless there is a change in policy. Now, but from a longer-term perspective, a simple price to earnings based kind of evaluation may not really capture the potential of the individual businesses that are housed under IRCTC. So it would be really interesting to look at the value of the IRCTC's individual businesses to arrive at a fair value of the stock. Now, this unique offering of several promising businesses under one umbrella would continue to enjoy a scarcity premium, which is difficult to quantify and would not get captured in our earnings-based sum of the parts valuation or SOTP valuations. Now, the company is entering new businesses as well, and since it has implemented its own payment gateway platform named IRCTC e-wallet, the private train business is also now promising and can be looked upon as a standalone activity once it gains a critical size. Now, if the stock remains lackluster due to the impending headwinds, it may be a great idea right now for investors to gradually build up positions in the weak phase for the long run.